Hi, my name is David Thompson. So what's the big deal about investing in real estate? Why is it so much different from other investments? So let's talk about why people would invest in real estate and why real estate can be an awesome investment compared to other types of investments. And we're just going to cover 5 topics real quick. There's so many other reasons why, but we're going to talk about appreciation, depreciation, cash flow, debt reduction, and deferment of gain. So let's look at appreciation. Simply, that's the amount your property goes up. So if your stock goes up by 5% and the house goes up by 5%, $400,000 each, you made $20,000 that year. The really cool thing about real estate is it's really quite stable. Yes, we do have little bits of downs, and we did have a couple of years, 2007, 8, and 9, where it actually went down quite a bit, but it also come right back up again. When we look at real estate, over a period of time, real estate has been a very safe and secure and lucrative investment. That's appreciation. Now, depreciation is the reason why a lot of investors invest. And many people don't understand what depreciation is. So I'm going to use some easy math formula here. I'm going to say you bought a $400,000 house and it's $130,000 is the lot cost, what the property is on. So what is called improvements, which is the building, is $270,000. The reason why I use those numbers is typically you can figure it at 27 years. There is ways to accelerate this, and I can explain that to you. However, if we divide 270 by 27, we come up with approximately $10,000 per year. And that's $10,000 I can move into my tax return and call it depreciation. I don't have to pay taxes on that. So if you think about this, if you own 10 properties, you can bury, if you would, $100,000 a year of not paying income on your regular income because you had depreciation. Really cool. One of the main reasons why we invest in real estate. Next one is cash flow. So cash flow is what everybody thinks we invest in real estate, and it's actually one of the smallest reasons why, but it's simply this. If your payment, if you're financing it, and your expenditures equal $2,000 a month and your rent is $2,300, you make $300 a month, and $300 over 12 months is $3,600. So there is cash flow also. The next one is called debt reduction. So there is ways, but it's very difficult to finance other investments like stock and et cetera. However, in real estate, we can finance, we can have tenant pay, and therefore balance decreases. And if over 15 years or 30 years, whatever it takes you to pay that off, basically the tenant is making the payment to pay down your debt obligation and eventually own property free and clear. The last one I'll mention is just really, really cool. See, I love the game of Monopoly. And when you buy a house and you buy another one and you buy another one, you have 4 houses. When you buy 4 houses, you can actually roll it into a hotel or apartment complex, whatever you want to call it. And that is called a 1031 tax deferred exchange. See, in real estate, when we make money on something, we roll it off into another property. We don't sell it, so we don't pay capital gains. See, if you sell a stock, put the money in your pocket, you pay capital gains. Real estate, we roll it and defer the gain. So therefore, we're not paying those taxes. They're deferred. So you got appreciation, depreciation, cash flow, debt reduction, and tax deferment. So if you want to get into this more, this is a true passion of mine. Give me a call and we could sit down and I can go over everything about why you invest in real estate. My name is David Thompson and I am with the Dream Builder Realty Group.